On today's episode, we are going to take a look at Netflix. They just reported earnings and they're down almost 6% after hours. So today's episode is going to be broken down to the following. First, we're going to take a quick overview on their earnings, and then I'm just going to give my overall thoughts on the company and the earnings, what I liked and what I didn't like. If you're new to the channel, don't forget to hit the subscribe button and don't forget to hit the thumbs up. It helps the small channel out so much and I truly appreciate it. Finally, anything I say here should not be taken as advice as I am not a professional. So Netflix right now is sitting at $495 after hours, is down about $30 after reporting earnings. Let me know in the comments right now, guys, what are your thoughts on Netflix? Is it a buy right now? Is it a sell? Also, don't forget to hit that Webull link that's in the pinned comment and on the description. If you sign up, we both could get a free stock. All right, so Netflix right now, after this 5% drop, its market cap is closer to $220 billion. So this is still a big boy. Not much has changed, right? It's just a 5% difference. It ended the day at 231. Now with this drop, is sitting at 219 to 20 market cap. So let's do a quick recap on their earnings. So today, October 20th, they reported earnings. Quarter 3 GAAP earnings per share of $1.74, which missed by 39 cents. Revenue for the company was $66.44 billion. That's up 23% compared to the same time last year, and this actually beat expectation. The thing that did not do so well were their net ads. They added 2.2 million new subscribers to their channel, and now to Netflix, and now Netflix is sitting at a total of 195 million users. The guidance that they gave last quarter, and I did a video on them a few days ago, they mentioned their guidance was $2.5 million. A lot of people are going crazy, are believing this is probably the big reason for the drop. I don't understand why. I think it's just the overall hype that this company was taken from all this stock price risen. But Netflix last quarter mentioned that this quarter was going to be pretty weak for them. So they did give, we can sell by their guidance was 2.5. So they weren't too far off. They did give quarter 4 guidance, which was about 6 million new users for this upcoming quarter. And that would give Netflix a total of 201 million paid members. That's up 20% compared to the same time last year. So they are still expecting strong growth. So now let me talk about what I like about the earnings first. So the first thing I liked is obviously Netflix reminded everybody that, hey, we told you last quarter that the subscriber growth was gonna be slower than expected. And the reason it was slower is not because it's not for any negative reason. It's just the first half of this year was due to COVID-19 and due to the working from home and people staying at home, all the lockdowns, more people were subscribing. So they pretty much borrowed the subscribers, right? In the previous 3 quarters with COVID-19, a lot more people were jumping in. Those people were, in theory, in their numbers, were supposed to jump later on throughout the year. So they kind of just borrowed those subscribers and they subscribed at an earlier time. And they actually show us a picture on their earnings report where you guys can see how this type of subscriber has seen a huge dramatic growth in the past 2-3 quarters, right? Right here, I'm showing you guys the weekly net ads year to date. So we can see 2020, in March, April, May, we saw a huge increase of users, right? And then what happens? This is pretty much a rubber band effect. You pull too much and eventually things have to pull back down. Similar things happen in everything in life. So that's what happened. Things started to cool back down, and now look, they're rising they're rising again. So now with the new forecast they give for quarter 4 for 2020, the type of gains that they're seeing in 2020 is still higher than 2018, still higher than 2019. I believe even the ads that they have right now just for quarter 3 is more members than they added in for the full year of 2018 and the full year of 2019. Actually, for the past 4 years, right? So that's pretty impressive. We're still seeing that Netflix is still growing at crazy numbers numerically wise. Percentage wise, this might look like it's smaller. They did mention that a huge number of the subscribers that came this quarter came from the Asia Pacific region. They were the largest contributors to paid membership growth, and they accounted for 46% of all global paid net adds. And here, let's also take a look at that chart of how that type of growth is coming by individual country. A lot of this information can be found in the company's earnings transcript. So this quarter, they saw 2.2 million new subscribers. 0.2 came from United States and Canada. This is probably the slowest region right now growing, just because it's probably the most developed. Then they saw about 0.76 million coming from Europe, Middle East, and Africa. Latin America saw 0.26 million, and we can see Asia Pacific region came with 1.01 million users. So that's where a huge portion, almost half of the total net ads are coming from there. And here we can also, in this chart, we can also see what each country is kind of paying. The annual revenue per users for like United States and Canada is usually the highest, sitting at $13.40. This is a bit higher compared to same time last year. For Europe, Middle East, and Africa, this is $10.88. Again, a bit increase compared to same time last year. Latin America saw a decrease in average return per users. Right now, they're paying about an average of $7.27, and the Asia Pacific region is about $9.20, and this is down about 9 cents compared to same time last year. One of the biggest reasons for this decrease in average revenue per user, though, is due to the change in currency rate, and this is usually a risk of having international exposure. Due to the change of currency risk of $1 dollar increasing and other currencies decreasing, you see a huge change in the actual valuation of money coming in. Some other things I like this earnings is Netflix mentioned that the numbers of originals coming next quarter, next year, is still going to be up compared to the same time last year. So they're still going to be pushing out new content. And it's important for Netflix to push out new content because new content, it has a very high upfront cost. But once it has that upfront cost, it's a lot cheaper for Netflix to have than to have those licensed content of some other creations that they did not make. Unfortunately, due to delays to production, due to the global shutdowns, there have been a few pushbacks. But the company did mention that in the upcoming quarter, things are picking up, and they're already recording new stuff for their new content in the upcoming quarters, like a new season of Stranger Things and just new originals. I think another season of The Witcher, Witcher 2. So we can see things are moving back up. The final thing I want to talk that I liked about this company, and then I'll talk about the things I didn't like about earnings, is they do have free cash flow positive for the third straight quarter, and it's positive $2.2 billion for the first 9 months of 2020. And at first, this was kind of, I wasn't seeing this in the full picture kind of way, if I may be honest, right? I did know that the reason they were positive in cash flow was because they stopped productions. They stopped producing items. So by them stopping productions, they weren't gonna pay as much. What I didn't think about was the other side of it. As they're grabbing more users right now, they're also collecting more money, pushing that weight of positive cash flow a lot quicker. So in the upcoming quarters, yes, they're gonna be paying a lot more in production cost, but I don't think it's going to be that crazy. They mentioned in quarter 4, they expect free cash flow to be about $2 billion for the full year of 2020. So that means for the upcoming quarter, they're seeing cash flow, free cash flow being negative $200 million. So we can see it's not that big of a number. So it was great, right? Netflix grabbed a lot more users. They produced less content. So now they're collecting more cash. Now with that more cash, they're building up their overall cash positions. And now they're just going to start, once they restart producing new titles again, they're not going to go in super speed, right? They're just going to produce it in the same amount of time. So this has actually been pretty good for Netflix, and to me, I'm sad I did not look at it like that earlier in the previous quarters. A quick look at the balance sheet for Netflix. They have about $8.4 billion in cash. This includes, they also have another $750 million of credit line, which is undrawn right now. And with having free cash flow for the year of about $2 billion, Netflix right now has a very, very strong balance sheet. They mentioned that they don't see having any further capital raise in the upcoming year. So that's actually pretty good, right? They definitely have plenty of cash to be able to survive for a long time right now. So now let's take a look at the things I don't like about Netflix. The first thing I don't like about Netflix is the free cash flow for 2021 is expected to be negative $1 billion to break even. So even with this huge increase of members for this quarter, for this year, next year when things return back to normal, they're still going to provide a negative free cash flow, except they do expect it to be closer to break even. So I think they're still in line. I believe by 2022 and 2023, they expected full free cash flow positive. That is definitely a very important thing for them to reach. The only other thing I'm not too happy about is, obviously this is due to compensation of stocks. There are an increase of shares, right? They're increasing their shares every quarter. So for example, same time last year, they had 451 million shares. Right now they have $455 million shares. That is something I'm not fancying, right? That's dilution increasing. But they do give you their earnings per share in diluted earnings per share, and that is increasing compared to same time last year, right? So $1.74 this quarter compared to $1.47 same time last year. Other things I honestly did not mention that I do like is, yes, the growth of Netflix. This is something I like and don't like, honestly. Yes, the year-to-year growth of Netflix is decreasing when we're taking a look at revenue, right? We can see 31 in quarter 3 of 2019, and every year from there has decreased about 2%. This quarter was 22% growth, and for quarter 4 they expect a 20.2% growth compared to the same time last year. Even though it's still, I would still consider Netflix a growth company, right? Growing at 20% year-to-year revenue is still amazing. We're definitely seeing that decline. And right now, I do believe that increase happened, that huge increase right now happened due to the situation that we were in, working from home and people staying focused at staying home. But I wonder how the following years, when things open up, how much of this growth will continue? Will they still be seeing strong double digits? Will it go down to the low teens? So this is something worth mentioning, right? It's just something that we should definitely keep an eye on as investor. Honestly, right now though, I do not have a position in Netflix, and I'm not sure what I want to do with that. So the other thing, I'm not too, I want to say, I'm not sure if I don't like it. I would definitely put it in the risk. Right now, Netflix has a very high forward PE ratio. But like I've mentioned in many of my videos, when we look at growth stocks, forward PE ratio is probably not the best position to take a look at. If we take a look at their price to sales ratio, they have a forward price to sales ratio of 7.9 for forward of 2021, December of 2021. That is not horrible right now. And this is actually not counting the 5% drop. So the values won't change too much even after this 5% drop. But there is going to be a decrease. To me, to be honest, Netflix is not a position I personally would go in and buy a huge position in my portfolio right now. Maybe if I wanted to add a position in Netflix, right now would be the time where I was at a small position and then just have it in dollar cost average from there. I do believe in the upcoming years, Netflix will still surpass the overall market in forms of returns. The only thing is Netflix will be a lot more volatile in forms of the overall market. When I'm talking about the overall market, I'm talking about the SPY and QQQ, right? So Netflix is one that I wouldn't mind having a small position right now, but I'm still debating if I'm gonna buy or I'm gonna sell. And like always, every Thursday on my Discord channel, which is free to anybody that wants to join, I post my buys. Every Thursday, I put money into the market, and every Thursday I buy. So that's when I ultimately decide what I purchase, and I'm very transparent. It's free to anybody who wants to join. So I hope you guys enjoyed today's episode. Like always, make sure to hit the thumbs up. Make sure to subscribe. It helps the small channel out so much. And let me know in the comments, what were your thoughts on Netflix earnings right now? Take care, guys, and have a good night.